You got my name. I'm with Bloomberg Intelligence. I'm the senior commodity and crypto strategist. Um, just a little point of what I do. Let's see if I get this right. I publish on the Bloomberg terminal, and one of my main focuses is commodities and cryptos. We've really been in cryptos the last couple of years. For me, it's been many more years, but Bloomberg is the last year, and I've been one of the main persons trying to move Bloomberg ahead. Now, Bloomberg has very intense due diligence and compliance, and my team was instrumental in starting the Bloomberg Galaxy Crypto Index, which my key goal was getting this space in for institutions. So we partnered with Mike Novogratz in Galaxy, and we came out with a good index, but the hoops we had to go through to get defensible, robust data was shocking to us. Data where you can say you traded this here, and when someone prides a swap on this, they won't have issues with basis points and things like that. So, help clicking them back. I guess this is clicking on and off. So what I'm going to show you is a similar presentation I've given many times. I've given it once with Mike. I kind of backed away with that one. Just let him go. I've given it with Adam White of Coinbase, and I gave the same presentation last week in Hong Kong. So I'm gonna have to be fast because that one lasted an hour and a half with Q&A. So some of this data here, I suspect will get a little bit. Let's see if we can. I guess I'm just not clicking right here. Sorry about that. We'll be over the head of some people. I want to start with my first chart. If I can roam around, I promise I'll go each side, but I like to get in front of the chart. What you see here in that orange line, that's supply. My main focus as a strategist is trying to figure out where this market's going. And one of the blessing and curses that I have and my team had is we picked the peak within a week last year. Now everybody knew it was obnoxious. We got the peak within a week, and I'll show you how we did that by just digging into the data. What you see is a problem with supply. Supply is parabolic, so I guess I'm blinking out here a little bit. And as any type of strategist, any type of person in markets, we can always show you massive supplies of problems. So that's just the amount of new coins listed on coinmarketcap.com. In addition, you see volatility. I guess it's a little bit blurry, sorry about that, but one of the key things that's been happening in the market for a bottom, you need a bottom in volatility. Typically, volatility goes up with a higher price. So I want to bring it back to, I think it was October 2015. I'm looking for something like that. My main goal after this presentation this weekend, as we look to publish next week's Bloomberg Crypto Outlook, is to find every possible way I can to get bullish in space, and I'm still bearish. Unfortunately, it's been down a lot, but I got to move on at some point. So what happened in October 2015, you see right here. Sorry about that. Volatility reached a new low. I was trying to pick that one up. Testing. Okay, we're trying again. Volatility reached a new low, which it should. It depends on which measure of volatility. In this case, I'm using, I think, 180 day on Bitcoin. In addition, oh, sorry, we move back. There we go. And supply was stagnant for a year. There was no new coins launched. We hadn't moved up. In fact, I think it was right around that it started to decline. That's what I need to see. Indications for the market to bottom. Haven't seen them yet. This is just one simple chart. In addition, you see in the white line there, the market's dropped. That's the broad market over Bitcoin. The market's dropped over, and Bitcoin's still a little bit high. So I'll move on a little bit from this one to the next slide. Volume. And what I want to see is what you see in this little red line here. Volume has been trending higher until with a peak, and now it's trending down. Now this is a 30-day measure of Bitcoin equivalent volume, not dollar volume. So we have to put it into a numeric, something that's measurable, and that dollar is distorted. And you can see in the white line, we just try to scale properly. Volume has been plunging. In fact, it's well below the scale we set up for Bitcoin. So the typical volume it's stabilized here is when Bitcoin last was around 4,500. Now, not exactly predicting that, but that's just what volume's telling me. What I want to see is what happened down here. And I promise I'll move to the other side in a little bit. It's what happened down here. And this little, like when we had the bottom in 2014, was volume started to pick up well before the market, and volatility got very low. We need to see something like that. Nowhere near it right now, but hopefully we'll get there. Next slide. We've all seen the comparisons to the dot-com bubble. We did a lot of that last year. I refuse to do it again because there was a Bloomberg story last week that pointed out the market just matched that bubble, so we'll stay away from it. So I like to compare the corrections in Bitcoin to past Bitcoin corrections. The magic number is 84% correction. The first big one, 2011, dropped down, it was around 93%. And then if you see that white line, it stabilized around 84% for about a year. The last big correction, we all know 2013 to 15, dropped to 84% was the actual low. Right now we're on 65%. It'd be nice if we end there. But one thing I try to get a sense for is picking, when's the bottom going to come? Typically, it's when people give up. And there's too many people calling for a bottom is the way I look at it. But now that's more anecdotal. Another indication, Bitcoin unique address is used. It's been a very high correlation between the trends in this. Oh, good. I didn't know we had it in the middle screen. Awesome. I can go up here. Thanks for pointing that one out. Bitcoin address is used, the white line, trending higher. But what we've seen with the collapse this year and last year is the biggest plunge ever in addresses used. Now, it's also how you measure it. I think I'm using a 30-day average here, 60-day average. It's stabilized where Bitcoin was at 1,200. Indication from the market we potentially could go back there. The point is, it's potential recovering, sign of strength, but we're there. This is just a fact. This is a high correlation indication for the market. My goal constantly on a daily basis is find every piece of data I can that can help me predict where the market's going. That's the primary goal. And as I get into this slide, one thing to point out, I'm probably one of the most neutral people you hear in the space. I've been accused of having, Bloomberg has a vested interest in the space. My main vested interest as a strategist is getting it right. If I get it wrong and no one reads my research, I'm fired. That's simply how it is. So the main purpose for me, Bloomberg Intelligence, is getting the market right for Bloomberg terminals and then for anyone else who picks up. Network value to transaction ratio, the NVT. This is one of the ones I made sure we featured on TV a little while ago because it's one of the ones that scares me the most. Essentially just what you want to see on the bottom, you can't see in the middle, but you need this level to bottom. It's very similar to a PE ratio. Typically, as I point out, these little circles and the green lines, when we've had good bottoms in the past, the NVT ratio has been quite low. The problem is now, it's about the highest it's ever been. So basically the price, the market cap of Bitcoin compared to what's really trading is quite high. Essentially the PE is the highest it's ever been. It looks like it's peaking. Fact. Shorts. I started in the Chicago Board of Trade in the 80s. We always watch things like manage money net shorts. I can't really figure out how to get net shorts in Bitcoin yet, but futures were launched last year. For 2 weekends in a row, I had a comment on Bloomberg radio about the futures launch. And one thing to remember about futures, first of all, they're insignificant total volume. But the purpose of futures is to short the market. Certainly people in Canada would understand. In a farming environment, I used to own a farm. Futures are number one purpose, the reason they were launched historically and have been used is so you can hedge your production. So that kind of happened. When people say the futures expirations move markets, it really shouldn't in terms of total volume. But what I did here, if I have a measure of the best measure we can have from shorts in the market, add in what I can get for the futures, and you see what I see is diminishing returns from short covering. So the big rally we had in April, which coincided with US tax season, had a pretty good dip in short covering, in shorts. The market covered shorts, the market went up. Now we've had another decent new high in shorts and another rally, diminishing returns. The market's shorter, it should get shorter. It's a maturing bear market, it's a maturing market. More participants, more hedging. What does that mean? Less volatility, which is good, but typically it means lower prices. One thing that I found really striking, that really made me become more of a Bitcoin maximalist, was what happened in July and what happened in the past. Every time we've seen emerging markets collapse, like Turkey, which is getting hammered early in July, Bitcoin was up and virtually even treasuries were down. Gold was down, but Bitcoin held in there, and there's massive volume on Turkish exchanges. Why? Because we all know why. Bitcoin it's the new form of gold, but you can just push a button. So I completely believe in that, but it's just the value that is still a bit high. So what I show you here is an inverse in white of the emerging markets index. That's the MSCI index, and Bitcoin divided by the broad market. How is Bitcoin trading relative to the broad cryptocurrency market? And you can see we've obviously had the big plunge, and then Bitcoin picking up. Here was when the futures were launched. Right here was when we had the potential for an ETF, and then it went further up. But it went to a pretty good resistance relative to the whole market. I think it was around 55% dominance. But the point is, there's a good connection between emerging market currency issues and Bitcoin relative to the broad market. Everybody hates Tether. I was asked in Hong Kong after the presentation, Mike, you love Tether. No, I don't love Tether. I'm pointing out facts. All my research that I see in the space is that stablecoins have the most potential use case for a global potential peer-to-peer crypto or cash system. Why? Because they're stable. So here's just a chart of the market cap of Tether overlaid with the broad market. Why? Well, we all know people are getting out. There's liquidation. But also, what does Tether have? It's stable. Now, it's stable to USD. Okay, now that's somewhat subjective. My belief is the proper coin should be somewhat similar to what Bitcoin was first patterned after, gold. Something that's stable to potentially to gold. Again, that's just a personal view. So this is something that was inspired by a question I was asked on live TV. I was pointing out just things I was showing you, and they're like, Mike, where's the winner going to be? Like, I don't know what the winner is going to be, so I have to really try to measure what's happening and what's winning and why. And so this is just a measure of where the market was last year and how the ranks are moving. What's moved up the most in rank this year? Tether, the stablecoin. Not a fan of Tether. Doesn't matter if I'm a fan of it or not. I'm neutral, but pointing out facts of what's winning, we can all define why it's winning. Until the big pump last week in Ripple was the biggest decliner, but that's come back a little bit. But overall, that's the key thing. Is Tether is one of the biggest winners so far, just pointing out facts. One of the key things we hear all the time, and I was on a panel in New York in April, and the gentleman and I started debating this concept of limited supply, and the moderator shut us off, and the audience booed because they wanted to hear at the end of the conversation. So unfortunately, we don't have time for Q&A. Just love to absorb information, but I look at as a commodity strategist, the hard fork probability in Bitcoin Cash as unlimited supply. How am I doing for time? We good? Okay. Unlimited supply. So as a strategist, someone trying to figure out where markets are going, unlimited supply, I need this demand make up for that. Don't see it at the moment. And this is just an indication. We've been using the same slide since last year, pointed out the supply issue. Ethereum. Now, a lot of the guys I will listen to this weekend, I listen to so many podcasts, so many YouTube videos, so much research I read on it. Just love it. It's addictive to space. For a commodity guy who's kind of addicted to cryptos as a strategist, so how many people hate Ethereum now? If you hate Ethereum, you hate the market, the way I look at it. But this is something we put out last month, pointing out 55 was good support, 155 in Ethereum. And that's since got to near 170, and it's bounced back. But the key thing with Ethereum is EOS is a problem. EOS is a competitor. And this pump in EOS, remember, it made that little new high right when it went from mainnet, marked the peak of the market, the peak of the bounce. So one of the things I watch every day as a commodity guy, as a markets guy, always trying to look for little indications what's driving the market, is what EOS is doing. EOS in the dump mode is indicative of the entire market. So a bit of an indication for Ethereum. Same thing, more competition, futures to be launched, more participants. What should happen in Ethereum? Volatility has to go lower. It's not a question of if. And as a strategist, it's risky for me to say that. It's just a matter of time. It always happens. And maturity. The market's maturing. So what happens with lower volatility? It's virtually not going to happen with higher prices. It almost never does. What happens with higher prices, the market gets out of its cage and it has too much room to move. It needs to stay in a lower area. So volatility is still too high in Ethereum. If you can see that bottom indication, 90-day volatility, the last time we had a good low in Ethereum was when 90-day volatility reached a new low. Remember, volatility is a lagging indicator. So it's not always the best, it's 90-day volatility. It's the last 90 days. I think it should get below that 45% before we see a good low in the market. So I'm getting towards the end. This is a chart we featured last December and kind of became our curse. It was just pointing out the F word in Bitcoin. I had to be careful saying that on TV. The 3 F's of Bitcoin, which lined up last year. The frenzy, futures, and the Fed. So one thing we did find, it's uncorrelated to everything, which is wonderful. The institutions want that. Something that's not uncorrelated to any other assets. But Bitcoin is highly correlated negatively to Fed tightenings. At least it was. Every time the Fed tightened, Bitcoin would drop at least 20% within a few days. So we pointed that out. Here, what you see in white is just the price of Bitcoin relative to the 60-day average, just to get an idea of the momentum in the market, the velocity, overlaid with gold. So right before that Fed meeting last December, gold was bottoming, Bitcoin was peaking, the Fed tightened, that was the top within a week. Now what? I'm trying to pick out the bottom. That's my next problem. And having the market corrected so much, saying the same thing gets old. And as a trader, you think, oh, you have to follow it with a stop. When am I going to be stopped out? Trying to find that spot. And I want to finish up with this one key slide, which to me is the key thing to remember in this space. As a strategist, what am I analyzing? Satoshi Nakamoto's white paper. When you dream that you've met Satoshi and he kind of looks like Yoda, you know you're getting too deep into space, so you know it's probably not what it is. But the headline, a peer-to-peer electronic cash system. It's not what it is. We all know that. I can't trade it without problems. I can do that with cash. It's probably, you can do it with Tether, maybe Litecoin. And by the way, if you're trying to bank, the unbanked, you don't want to worry about losing or maybe making 20%. It can be great if it continues going up. But what it is what I'm analyzing. I'm analyzing, as a strategist, speculative speculative cryptographic assets. That's the way I look at it. And that's why I'm trying to find bottom in the space. I don't think we have time for questions, but that's my last slide. We have time for questions?
I'll give you one.
Oh, great. Shoot.
All right. One question. Someone got a question? Anyone? Mike? I guess not, Mike.
Yeah, I'm used to that.
Okay, one right there. One right there. Go ahead,
yes, sir.
Quick question.
Hi there. With fiat losing value constantly by design, is a stablecoin really a proper term for a US-backed digital asset?
I love the question. It's a question so I agree with you completely. Does it have to be stable to the dollar, to a basket of currencies? I don't know. I always resort to gold. I'm a commodity guy. Gold has been around forever. Bitcoin was really patterned after gold. I kind of resort to gold as in the middle, but that's a question for you. Help me, guide us. I don't know, but U.S. dollar probably not. We all know it's done for the last 100 years, depreciated, but gold hasn't. So I always kind of resort to gold. Anything that can be related, somewhat linked to gold, to me, that in that space should work. But it's got to be stable. Something that's so much speculative. You know, virtually everybody I exposed to in the space, I always ask them. So when you own your Bitcoin or whatever you're buying or selling, what are you going to use it for? Oh, to sell higher or to buy something else with, not to buy something or to exchange as a cash system. I haven't heard that very much yet. So hopefully we'll get there. Thank you, everyone. Appreciate your time.
Thank you very much.
Thanks for having me.